Westpac's overdraft facility is a financial tool linked to your transaction account, providing a pre-approved line of credit to cover payments that exceed your current balance. It's designed as a safety net for short-term cash flow gaps. The facility has an approved limit, which is the maximum amount you can overdraw your account. This limit is set based on your application and financial circumstances. Once your overdraft is set up, it functions automatically. If you make a transaction, like a direct debit, card payment, or withdrawal, and your account balance isn't enough to cover it, the overdraft kicks in. The facility effectively allows your account balance to drop into a negative figure, up to your approved limit, ensuring the payment is successfully completed. You can typically access the overdraft funds through all the usual channels linked to your transaction account, your debit card, online banking, or ATMs. You're essentially using the bank's money when your account is in the negative. A major feature is that you only pay interest on the exact amount of the overdraft you use, and only for the period it's used. This interest is generally calculated daily on the overdrawn amount and charged to your account monthly. Unlike a traditional loan with fixed monthly repayments, the overdraft is a revolving credit facility. There are no minimum fixed monthly repayments required, but you must bring your account back into credit or at least stay within your agreed overdraft limit. When a deposit hits your account, it automatically reduces the negative balance of the overdraft. Keep in mind that while there might not be a lending establishment fee, a monthly loan account fee often applies just for having the facility available. Additionally, if a transaction causes you to exceed your approved overdraft limit, you may face an overdrawn fee and potentially a higher interest rate on the amount that goes over the limit. It is critical to stay within your approved limit to avoid these extra charges. An overdraft is a flexible tool for managing unexpected, short-term expenses or timing differences between income and outgoing payments. It's not intended for long-term borrowing or consolidating debt. It's a convenient, on-demand safety buffer, but because interest rates can be higher than other types of loans, it should be used judiciously and repaid quickly. The availability and exact terms of personal overdrafts can vary, with the bank sometimes offering alternatives like a flexi loan. For businesses, overdraft facilities remain a common way to manage operational cash flow.